Okay, very good morning. Tuesday the 20th of February, so I hope everyone is well. Just going to have a debrief of yesterday. Really not too much to talk about. Probably the biggest headline was KFC ran out of chicken. It's about as exciting as it got yesterday. But looking forward to the day ahead, there's quite a few things to be aware of. There's a couple of news items I'm going to quickly go over. Then I'm going to hand you over to Sam, and he's going to talk about a couple of levels. So I'll try not to dwell too much on the technicals. I'll leave that to Sam. That's his forte. But looking at the general sentiment this morning, we've got a slightly firmer dollar. There's not really been anything in the way of, I'd say, new news that's come out to firm the dollar up, but obviously you've got to put it into a bit of context. The dollar has quite recently been trading at 3-year lows. It's been weakening fairly persistently, or consistently I should say. So a little bit of a bounce, up about 0.4% this morning, and it does come ahead of quite a lot of fixed income supply, where yields obviously at recent auctions have been particularly high, given some of this inflationary concerns that we've had and this expectation of then accompanying of higher rates going forward. We'll get onto that in a second, but a little bit of sterling strength has led to then a bit of downside pressure in both major pairs, as you can see in the top left hand corner. Euro dollar and cable already on the back foot this morning, both down roughly about 60 pips each. Cable has broken that previous day low, and it's finding that previous support as a bit of resistance now on the move back. Gold consequently down about 16 bucks with the firmer price of the dollar. However, crude oil still remaining positive, at least for the moment, albeit off its highest levels that were seen at the peak of yesterday's price activity, but still holding a 62 handle for the moment, up about 50 cents. But worth keeping an eye on oil if the dollar does continue to strengthen for any further downside movement. But then T-notes as well, just having a look. If you look at equities this morning, we are negative in the US futures, not forgetting as well the pivot levels probably won't make a lot of sense to you because of the US market closure means that the pivot levels are not recalculated, so I wouldn't rely on them too heavily this morning in the futures market. But despite the kind of slight softness in equity market, fixed income is down and treasury markets are down about 12 ticks. One thing to keep in mind here is today we kick off the sequence of one of the largest amounts of US supply we've had in a long time. So the US Treasury are set to sell $92 billion in a 2-year, a 5-year and a 7-year notes this week. This of course is the first set of auctions since the US Treasury announced that they'd be increasing the amount of supply on offer this was back in January. This is in order to help fund the anticipated growth in borrowing stemming from the Trump administration's tax reform and spending package. Now, the reason why this is important is because last week the 10-year yield hit its highest level in 4 years, while 2-year yields hit their highest level in over 9 years. Some obviously suggesting that the higher yields could see strong demand for the auction. So definitely what you tend to see is what's called a little bit of short setting going into a heavy amount of supply, not forgetting in the short end of the curve you've got a German Schatz auction coming out of the Bundesbank as well this morning. So Bunds moving in sympathy, but have also got to take on board about 5 billion euros of fresh supply as well, hitting the market this morning. So consequently Bunds down 22 ticks and US 10-year already down 11, as you get a little bit of pre-positioning ahead of that dearth of supply coming to market later on today. All right, quick look at the headlines, and you probably would have seen the front page of Bloomberg this morning. UK has a secret plan to hold Brexit cash if EU refuses to trade. So what this is talking about is Theresa May's team is eyeing up a contingency plan to hold back billions of pounds in Brexit payments if the EU refuses to give the UK trade deal it wants. So although this sounds quite sensational as a headline, and you would think this kind of brings about the whole prospect of a cliff edge scenario, hard Brexit. This is all, to me, just negotiation tactics. This is the UK trying to play a little bit of a coordinated move. The people where this comments have come from are anonymous. This has been a tip-off with insiders close to the talks on the UK side. So this is all done purposefully, of course, in order to facilitate the kind of the positioning ahead of the key transitional deal talks which will come up at the end of March at the EU summit. So do I think that this is weighing on the pound this morning? To a certain degree, but the bigger move here is the dollar. And when you start looking at how much does a article like this have an impact, well, the charts really clearly tell you this. This article came out last night. I actually saw this at about 6 p.m. last night, so it's not exactly new news. And if you look at both major pairs, both are lower, and everything is trading off the dollar accordingly. It's the dollar strength which really is the defining factor at the moment, and has been for the recent weeks. But certainly Brexit headlines you can expect will intensify in the weeks ahead. There's a key speech coming out from Theresa May, I believe, next week. That's when she's going to talk about the deadline for October, is when they want to get the trade talks kind of wrapped up. But this is contingent on, obviously, a transitional deal being secured in the March EU summit. So Brexit headlines continue, but I would say not really much in the way of a meaningful impact, but something to be aware of. Other things that have come out, the Reserve Bank of Australia, the RBA, overnight reiterated in its minutes of the monthly policy meeting the inflation is expected to only gradually accelerate as the economy strengthens and wage pressures increase. No real telling signs in direction for the Aussie dollar, a little bit choppy overnight, but not really reacting to this a great deal. Other things to be aware of course, Bitcoin back in vogue. As Sam was mentioning yesterday, it's almost like the Google bots have come sparked back to life. Now the price of Bitcoin's gone back to 10,000, and everything you see is flashing adverts for Bitcoin when you're on the internet. Bitcoin this morning trading back to 11,500. So don't forget, we were down at sub 6 only a few weeks ago. So that recovery continues. Looking at other things, don't forget you are in the midst of earnings season for UK firms. So this is what the UK leaderboard looks like this morning, and pretty much every significant mover is down to their earnings report pre-market today. So Intercontinental, their earnings came out. They're the biggest loser in the FTSE 100, but I'm more worried about the likes of HSBC and BHP Billiton, given the large market cap that they have as an index weighting for the FTSE proportionately. So if you're looking at things like the DAX, it's slightly outperforming the FTSE. I should say the FTSE underperforming because of some of these large cap stocks which have come out with disappointing numbers. So HSBC, their departing chief has signed off with mixed results for 2017, hitting several hard-fought targets, but also coming in, and this is the most important part, below analyst expectations on profits and revenues. The other company, BHP Billiton, so this is the world's biggest mining company. They've come out and posted their best half-year profit since 2014, declared a bumper dividend, but again, a little bit softer than maybe some of those most bullish or most optimistic people, I should say, on the street were looking for, and therefore their shares also equally down a similar margin. So worth being aware of these to identify the divergence between some of the performances between the UK comparative to mainland Europe this morning. Quick look at the calendar. There is not too much coming out early part of this morning, not at least until we get to 10 o'clock when we're looking out for the ZEW economic sentiment. Now, I wouldn't say this data in itself is going to set the world on fire, but certainly needs to be monitored. I'd say if you're thinking of any European asset strategy this morning, certainly this needs to be in consideration for your timing of executing any trade around that point. does have the propensity, if out of line enough, to move the euro currency and consequently the DAX and so on and so forth. There is a particularly wide range for this data today, actually. It's expected at 16, but you've got a low at 5 to a high of 23. So remember, just be aware of those ranges. The rest of the day, though, is pretty quiet. There's really nothing significant coming out of the US. That doesn't really start to pick up pace until the second half of the week. But don't forget, North American participants will be coming back to market as per usual market operating hours as well. And so you can expect a return to normality in volumes and so forth today. The one thing to be aware of, though, it is an ECOFIN meeting. So any European related comments, obviously in context of Brexit, just to be mindful of. And then the bigger issue, really, if you are looking at fixed income, is the large amount of supply hitting market. You're going to get the German Bundesbank with their Schatz auction just after 10, and obviously US supply, usual time, 6 p.m. our time. One company I would say, even if you're looking at the futures market ahead of US cash equity open, you do have Walmart reporting. Now, Walmart, obviously one of the biggest retailers on the planet, but their earnings release does have the ability to move index futures if it is positive or negative enough, and it has done on prior earnings seasons. So worth keeping an eye out for them. I'll get you a definitive time, but usually they come kind of 12:30, 1 o'clock London time. All right, that's it from me. Going to hand you over to Sam then to have a look at the charts and the setups for the day. So have a good one. Thanks.
Good morning. Let's have a quick look over. Obviously this morning, a bit of dollar strength come into the market. We've had a brief pullback now, and let's just start off with the dollar yen. I did post this in trading live, but we've just pretty much to the tick hit this point of resistance that we got at the, well, what's this, the 14th, Valentine's Day. There you go. Finding a bit of resistance there. Come back down, R2 will be the point of interest. Obviously, for the futures markets, the pivot levels are going to be exactly the same due to President's Day yesterday. So just something to bear in mind. But yeah, these market levels perhaps to be given a bit more significance than those technical ones for today. But yeah, just finding resistance up there. If we have a look at euro, just finding a bit of support stuck in between what was the previous low of the day around here. So similar for the pound at the time. I think for the euro, you know, to see this sort of continuation, you're going to want it to sort of remain within this sort of downward trend that you've got that has been quite well respected this morning in terms of levels, well, market related levels to the downside. So a quick look, I mean, just below here, we've got a brief resistance that we also found on the 14th that I would definitely be aware of. The pound this morning, if I just make this chart a bit smaller so you can see everything on here, you can see where we had resistance high the day 13th, pretty much support this morning, and I guess you could probably get a bit of a downward trend line on here, which lines up pretty well, and then to the upside, I think you might as well have one on here as well, just to see how we are trending down. Obviously the S1, which was chopped around a bit this morning and is yesterday's S1, perhaps you don't want to be giving it too much in terms of significance, and perhaps waiting for a higher up near that sort of 140 area might be the sort of safer play, or these points in the market where we did find resistance earlier. So I think that might be a better trade there, but just finding a bit of support here for the dollar pairs, or resistance if you're looking at dollar yen and dollar yen. It's just coming off its previous highs. If we have a look over equity markets in the US, which just started to get a bit more heavy following the push down that we saw yesterday, sort of from 2-3 o'clock. Again, trend line on here, the Nasdaq just having a look to sort of have a breakthrough, but we are pretty much on that low that we made overnight, and then you've got yesterday's low just below, so keep an eye on those. It's going to be similar for S&P and Dow Jones, you can see that trend line there. I mean, you had a break and then it got a bit messy for the S&P, and now, similar to the Nasdaq, we're on that level that we made overnight in the Asian session. So similar for both the Nasdaq and the Dow Jones, and pretty much the same for the Nasdaq and S&P, and similar for the Dow Jones, in that we've had a bit of a messy break of this trend to the downside. S1 offering an area of support with that overnight Asian session low. So something to keep an eye on here for equity markets. If we can push, perhaps through yesterday's low, the door then opens again, and you can see from the high that we made on Friday to yesterday, and then obviously today hasn't been completed yet, but we are starting to see price just get squeezed down again. So one to be aware of and keep an eye on is the US equity markets this morning. Oil here found really strong support yesterday a couple of times near Friday. The high that we saw on Friday, you can see here 61.87. Just probably get a bit of a trend on here as well. That R1, or yesterday's R1 I should say, another important point to be aware of. Got almost a bit of a head and shoulders there, but nothing too convincing. In terms of levels to the downside, I think I'd only be interested if we were to break through 87. You've got to imagine there's going to be a few stops around here now, following the buyers really taking over a few times yesterday above that level. To the upside, if we were to break through any of these sort of highs that we made today, the door then opens to the R2 and yesterday's high, respectively. So again, something to keep an eye on, and bear in mind as well with if the dollar strength was to continue this morning, it may well help that cause for oil coming underneath 61.87 as well. Dow Jones was keeping an eye on, by the way, just hitting that S1 that we made yesterday. So for those in that market, just to be aware, T-notes just coming back up to S1. This could be an area of resistance. We also found support here originally on the 15th before breaking through this morning, so now that level could act as a point of interest for people to look to come back in to sell this market. Originally the low we can see from today was also the low from the 15th, around sort of 10 to 2 o'clock. So an important point of the market, acted quite technically this morning. You can see really trending down quite nicely over the last sort of 24 hours, or really since Monday morning, or Sunday at 11 PM for the futures market. So a couple of interesting points. I'd say, considering how slow yesterday was, and the data calendar perhaps at its best tomorrow, out of these 2 days, I wouldn't really look to be getting in too aggressively for these markets. Let's have a quick look over at the European equities ahead of the data coming out at 10 o'clock. So we've got a bit of time. I'm not sure I really want to commit to a trade here. You can see DAX found quite good resistance, and Euro stocks was the same as well, as coming up, almost hitting that similar level here as well. So I'm not sure I'd really want to be in a trade before that German data. However, US equities just looking slightly heavy, but they'd really want to have to get below their lows that we saw from yesterday for this trade to perhaps really kick on again. But we have broken these trend lines, so something to bear in mind as well. Finishing off, just having a quick look at gold. So with this dollar strength that we saw this morning, you can see gold coming under pressure, understandably breaking through the low we made on Friday afternoon. Decent push down. S1 had found some support, or yesterday's S1 I should say, before breaking through as well. Had a bit of resistance, and you can see it was a pretty important level from the 14th as well, around here. So any breakthrough here opens the door to, I would say that, the next sort of area from the 14th sort of afternoon as well, and of course yesterday's S2. So interesting points in the market. Any questions about any of the charts, please do get them in the chat. I'd keep an eye just at the dollar, whether we are going to perhaps break to the upside, the dollar index that is, and then maybe these markets might start coming down again in similar fashion to what we saw this morning. If not, have a good day, and I'll catch you in the chat.